870. That's how many commercial aircraft Airbus told Wall Street it would deliver in 2026. The target was supposed to signal the comeback, proof that the world's largest plane maker had finally clawed its way out of the post-pandemic supply chain nightmare that has haunted the industry since 2020. Bloomberg called it ambitious. Reuters called it a stretch. Aviation analysts across the board circled the number and wondered, can they actually pull this off? And through the first 2 months of the year, the answer is looking like a definitive no. Airbus has delivered just 52 aircraft. 52. That is 20% behind last year's pace, while chasing an annual target that's 10% higher than what they managed in 2025. The math doesn't add up. And when you dig into the numbers, the picture gets even worse. According to data compiled by Aerospace Global News and Simple Flying, Airbus managed only 19 deliveries in January, a shockingly low figure, even by January standards, and an estimated 33 in February. For context, the same 2 months last year produced 65 handovers, and the crown jewel of the Airbus portfolio, the A320neo family, the single most important commercial aircraft program on the planet, is the program getting hit the hardest. These narrow-body workhorses made up more than 75% of all Airbus deliveries last year. And right now, they are nearly 30% behind a pace. So the question isn't academic, it's existential. What happened? What's behind the worst delivery start Airbus has had in years? And why did CEO Guillaume Faury, a man known in the industry for measured, diplomatic communication, just go to war publicly with one of the most powerful engine manufacturers on the planet? The answer isn't seats. It isn't fuselage panels, though those have caused their own problems. It isn't labor shortages. It's engines. Or more precisely, the engines that aren't showing up, and the supplier responsible for the shortfall has a name that every aviation enthusiast on this channel knows: Pratt Whitney. If you follow commercial aviation, the rivalries, the money, the machines, the geopolitics, make sure you subscribe to Aviation Atlas right now and hit that bell so you never miss a breakdown like this one. Because what's unfolding between Airbus and Pratt and Whitney isn't just a supply chain hiccup. This is a full-blown corporate confrontation that could reshape the entire narrow-body market for years to come. And we're going to break down every layer of it. Now, in aerospace, the relationship between an airframer and its engine suppliers is something close to sacred. These aren't vendor contracts you renegotiate every quarter. These are decades-long partnerships built on billions of dollars of co-investment, shared risk, and mutual dependency. When Airbus designs a new variant of the A320neo, Pratt & Whitney is at the table from day one. When Pratt develops a new iteration of the geared turbofan, Airbus is providing the integration architecture. You don't air dirty laundry in public. You just don't. It's an unwritten rule that has governed the airframer-engine relationship since the dawn of the jet age. Unless you're Guillaume Faury. And unless you've been pushed past your limit. On February 19th, during Airbus's full year 2025 earnings presentation, which, by the way, was supposed to be a victory lap, showcasing record profits with revenue climbing to 73.4 billion euros and adjusted EBIT jumping a remarkable 33% year over year to 7.1 billion euros. Faury didn't hold back. He broke the unwritten rule. According to Reuters, he told analysts directly, "We are very dissatisfied and we don't agree with it. We will enforce our contractual rights." Think about the gravity of that statement for a moment. The CEO of the world's largest commercial aircraft manufacturer just publicly accused a top-tier engine supplier of failing to meet its obligations, and then announced, on a globally watched earnings call with every major financial outlet listening, that he had initiated a formal contractual dispute process. This is unprecedented territory. But it went further than that. Leham News, one of the most respected independent voices in aerospace analysis, reported that Faury elaborated during the earnings call with even more pointed language. He stated that Pratt and Whitney had resigned from the orders that Airbus had placed, orders that Pratt had previously accepted for 2026 engine volumes. Let that distinction land. This wasn't a matter of Pratt saying, "We're going to be late." This was Pratt saying, "We're not going to deliver what we agreed to deliver." That's not a delay. That's a reneging of contractual commitments. And in aerospace, that is an extraordinary breach of the trust that holds these programs together. When reporters pressed Faury on whether Airbus had initiated formal legal action against Pratt, he confirmed the company had begun what he carefully described as a process, though he declined to elaborate on specifics. CNBC reported him adding, with unmistakable intent, that this situation turns into a legal battle if we don't manage to solve it in the amicable way. That's diplomatic language for, "We're lawyering up." Industry analysts and aviation journalists immediately drew historic comparisons. According to Reuters, this confrontation is potentially the fiercest dispute in commercial aviation since Airbus went toe-to-toe with Qatar Airways in a UK court over surface degradation damage to A350 jets in 2022. That case dragged on for months and became one of the most closely watched legal battles in aerospace history before the two sides settled. The implications of this new dispute could be even larger, given the sheer number of aircraft, airlines, and dollars at stake. And here's the critical context. Airbus didn't bury this in a footnote or leak it through anonymous sources. This accusation was delivered publicly on the record during the single most watched corporate presentation Airbus gives all year. That's a deliberate strategic choice. Airbus wanted the world to hear this message. They wanted Pratt and Whitney to feel the pressure, not just from Airbus, but from every airline, every investor, and every analyst watching. That is a message in itself. And the market heard it loud and clear. Airbus shares plunged as much as 8% intraday on the news, with Reuters reporting a roughly 6% decline at close, dragging the stock into negative territory for 2026. Record profits, record backlog, revenue up 6% year over year, net income climbing to 5.22 billion euros from 4.23 billion the previous year, and the stock still tanked because investors understand a fundamental truth about aerospace. Without engines, planes don't get delivered. Planes that don't get delivered don't generate cash. And cash that doesn't flow eventually kills production momentum. That's the spiral Airbus is trying to prevent. So why can't Pratt & Whitney deliver the engines Airbus needs? Why is one of the most storied names in aviation propulsion failing to meet its commitments to the world's largest plane maker? To understand that, you have to go back to September 2023. When Pratt's parent company RTX dropped a bombshell that sent shockwaves through the entire industry. TX disclosed that a rare contamination had been found in powdered metal, the highly specialized material used to forge high-pressure turbine and compressor discs inside the PW1100G geared turbofan engine, the very engine that powers the majority of A320neo family aircraft worldwide. Flight Global reported that this contamination consisted of microscopic iron particles that had been embedded in the nickel-based superalloy powder at one of Pratt's own manufacturing facilities. The danger: those impurities could lead to premature cracking in the turbine discs, and in a worst-case scenario, an uncontained disc failure, one of the most catastrophic failure modes in jet engine design. The scope of the problem was staggering and kept growing. RTX initially estimated that 600 to 700 PW1100G engines manufactured between October 2015 and September 2021 would need to be pulled off aircraft wings and subjected to detailed inspections, a process that requires partial engine disassembly and can only be performed at specialized MRO facilities. But as Pratt broadened its review of production records and inspection data, Aviation Week reported that the affected population expanded dramatically, eventually encompassing nearly 3,000 engines. The financial hit to RTX was enormous. The company took a $3 billion charge in the third quarter of 2023 alone, and that was just Pratt and Whitney's 51% share of the PW1100G program costs. Total estimated costs across RTX and its risk-sharing partners have since ballooned to between $6 and $7 billion. To put that in perspective, that's roughly equivalent to the entire annual operating profit Airbus just reported for 2025. That's the scale of this manufacturing defect. Now here's where the tension between Airbus and Pratt and Whitney becomes a genuine zero-sum game. And this is the dynamic that's driving the entire dispute. Every single PW 1100G engine that goes into a maintenance shop for powder metal inspection or component replacement is an engine that isn't sitting on the wing of a brand new A320neo rolling off the Airbus final assembly line in Toulouse, Hamburg, Mobile, or Tianjin. Pratt & Whitney is caught in a brutal, unwinnable tug of war, and both sides are screaming for engines at the same time. On one side, you have airlines, the operators, the customers whose planes are sitting on the ground, not generating revenue. According to data cited by Avitrator and Cerium, roughly one-third of the entire GTF-powered A320neo fleet, that's over 600 aircraft, has been grounded or placed in storage at various points during this crisis. Shop visit turnaround times have stretched to a punishing 250 to 300 days per engine. That's nearly a year. Airlines are hemorrhaging money every single day those aircraft sit idle. Pilot schedules are disrupted. Route networks are being redrawn. And contractually, Pratt & Whitney owes these airlines repairs. They have maintenance obligations that legally come first. On the other side, you have Airbus, the world's largest plane maker, sitting on a backlog north of 8,000 aircraft and an order book valued at a staggering 619 billion euros, all of which needs engines to turn paper orders into delivered aircraft and ultimately into cash. Every month that engine deliveries lag behind, Airbus burns working capital on aircraft that sit in various stages of completion, waiting for their power plants. That's factory space tied up. That's labor costs without corresponding revenue. It's a cash flow trap. And as Runway Girl Network reported from the earnings conference, Faury's frustration on this exact dilemma was unmistakable. We are very frustrated that they have decided to reallocate more to the in-service aircraft to the detriment of Airbus, where we think they should do more on increasing capabilities to serve both needs at the same time. That last part is key. Airbus isn't saying airlines shouldn't get their engines repaired. They're saying Pratt & Whitney should be investing more aggressively in expanding total capacity so both needs can be met simultaneously. And right now, that's not happening. This is the kind of story that trade publications cover in dense insider language, and that mainstream media barely touches. But you're here because you want to understand what's really happening in aviation at this level. If you're getting value from this analysis, smash that like button right now. It genuinely helps this channel reach more aviation enthusiasts who want substance, not clickbait. And it tells the algorithm to push this to more people who care about commercial aviation. Now, Pratt & Whitney, for its part, has pushed back, albeit far more quietly than Airbus. During RTX's fourth quarter 2025 earnings call in late January, CEO Chris Callio presented what he characterized as significant progress. He pointed to a 39% increase in engine output during the fourth quarter, a 16% reduction in turnaround time for shop visits, and what he called a significant increase in repair volume. RTX CFO Neil Mitchell added that the company believed it had put together a plan that balanced the competing demands, supplying engines for new Airbus aircraft while also supporting the in-service fleet. "We think we put together a plan that does just that," Mitchell told analysts. But for Airbus, those improvements, while acknowledged, aren't remotely close to what's needed. Bloomberg reported Faury as saying Pratt & Whitney's engine delivery outlook for 2026 is significantly behind their previous commitments. And here's the detail that transforms this from a headache into a full-blown strategic crisis for Airbus. It's not just Pratt & Whitney causing problems. CNBC reported that Airbus's other major engine supplier, CFM International, the joint venture between France's Safran and GE Aerospace that produces the LEAP-1A engine, the alternative power plant option for the A320neo, has indicated it is not in a position to deliver additional engines in 2026 beyond what it has already committed to Airbus. Stop and think about what that means. Airbus can't go to CFM and say, "We need you to fill the gap Pratt is leaving." CFM's answer is effectively, "We have our own supply chain constraints, and we're maxed out." Reuters also reported that Airbus had previously clashed with CFM over similar delivery delays just over a year ago. So both engine doors are closed. Airbus is boxed in. And that's why Faury went nuclear. The ripple effects of this crisis extend far beyond Airbus headquarters in Toulouse. Think about every airline in the world that has A320neos on order with Pratt and Whitney GTF engines, and there are dozens. Every one of those carriers built their 2026 network plans, their capacity growth targets, their route launches, their fleet retirement schedules, their crew training pipelines, all of it, around the assumption that new aircraft would arrive on or near schedule. When those aircraft don't show up, the downstream chaos is enormous. Airlines like IndiGo in India, Turkish Airlines, Frontier here in the United States, JetBlue, Spirit, before its bankruptcy, and carriers across Europe and Asia have all been forced to adjust operations at various points because of GTF-related groundings and delivery delays. Simple Flying reported that over 600 GTF-powered aircraft have been parked globally during the height of this crisis, compared to just 4% of the CFM-powered A320neo fleet. Let that sink in. 1/3 of the GTF fleet versus 4% of the CFM fleet. That disparity tells you everything about the scale of Pratt & Whitney's problem. And for airlines that went all in on the GTF, either because of its superior fuel economy numbers or because it was the only engine available for certain delivery slots, the financial and operational pain has been devastating. But here's what makes the 2026 situation even more dangerous for Airbus from a competitive standpoint. While the European giant is stumbling out of the gate with 19 deliveries in January, Boeing, yes, that Boeing, the company that has been mired in safety scandals, production shutdowns, labor strikes, and a crisis of credibility for half a decade, is finally showing tangible signs of recovery. CNBC reported that Boeing delivered 46 aircraft in January 2026 compared to Airbus's 19, and booked 103 net orders versus Airbus's 49. For the first time in years, Boeing is outpacing Airbus in both monthly deliveries and orders. That's a headline that would have been unthinkable 18 months ago. The competitive window that Airbus enjoyed while Boeing was consumed by the 737 MAX grounding, the quality control revelations, and the Alaska Airlines door plug incident, it's narrowing fast. UBS analyst Ian Douglas Pennant noted ahead of the Airbus results that sentiment around the European plane maker had turned markedly more sour since the beginning of the year. And this engine dispute is the biggest reason why. Financially, the market reaction was swift and brutal. Airbus guided for approximately 7.5 billion euros in adjusted EBIT for 2026 and 870 aircraft deliveries, both below what analysts had expected. Visible Alpha had consensus expectations at 907 deliveries. Berenberg was modeling 890. When a company misses market expectations by 20 to 37 aircraft before the year is even a quarter done, investor confidence erodes rapidly. JP Morgan analyst David Perry called the earnings report a potential clearing event that might provide an attractive entry point for long-term investors. But even he acknowledged the near-term pressure would be significant. And yet, there's a profound paradox sitting underneath all of this turmoil. Demand for commercial aircraft has never been stronger. Airlines globally are desperate for new, fuel-efficient narrowbodies to replace aging fleets and capture post-pandemic travel demand that shows no signs of slowing down. Airbus ended 2025 with an order book valued at 619 billion euros. That's over 8,000 aircraft waiting to be built. Order intake for the year rose 19%, by value to 123.3 billion euros. Revenue climbed to 73.4 billion euros. Net income hit 5.22 billion. By every demand metric, Airbus is in the strongest position in its history. But you can't eat orders. You can only eat deliveries. And deliveries require engines. The problem isn't demand. The problem is physics and industrial capacity. You cannot will turbine disks into existence when the powder metal that forged them was contaminated during a 6-year manufacturing window. You cannot accelerate MRO shop visits when the entire global network of specialized GTF repair facilities is already running at maximum throughput. This is a capacity ceiling problem, and capacity ceilings don't disappear because a CEO gives an angry press conference. Now, I know what some of you are thinking. Who's actually right here? Is Airbus being unreasonable, demanding engines that physically don't exist yet? Or is Pratt Whitney genuinely dropping the ball, prioritizing profitable aftermarket repairs over new engine deliveries? That's the debate. I want to hear your take. Drop a comment below and check the pinned comment at the top of the section. I've set up the question there, and while you're at it, share this video with a fellow aviation geek who needs to understand what's really happening behind the scenes in commercial aviation. This is the kind of deep dive you won't find on the evening news. Now, in fairness, there is one somewhat encouraging development. MTU Aero Engines, the German company that serves as one of Pratt and Whitney's key risk-sharing partners on the GTF program, weighed in publicly last week. Aviation Week reported that MTU CEO Johannes Bussmann expressed confidence that a resolution between Airbus and Pratt and Whitney can ultimately be reached. MTU, which manufactures critical components for the PW1100G, including low-pressure turbine modules, is itself absorbing 250 million euros in charges related to the powder metal issue in 2026. Down from 360 million euros a year earlier, suggesting the financial peak of the crisis may have passed. Bussmann also offered a technical olive branch, noting that the GTF engine is meeting expectations in terms of fuel burn and noise performance. The technology itself, the revolutionary geared architecture that makes this engine special, isn't the problem. It's the production capacity, the MRO throughput, and the powder metal remediation timeline that can't keep up with the simultaneous demands of the existing fleet and new aircraft production. And that's the cruel irony at the heart of this entire saga. The PW1100G geared turbofan is, by most accounts, a genuinely revolutionary piece of engineering, delivering double-digit fuel savings over the previous generation V2500, measurably lower noise signatures that matter for airport communities, and better operating economics that airlines have come to depend on. The technology is brilliant. The engineering is sound. But the manufacturing and quality control failures in the supply chain, failures that trace back to contaminated powder metal produced at Pratt and Whitney's own facility, have undermined what should have been a crowning industrial achievement. And now, that failure is threatening to unravel Airbus's entire production strategy at the worst possible moment. So where does this story go from here? The stakes for the rest of 2026 are enormous, and the margin for error has vanished. Airbus has publicly committed to 870 deliveries for the year, but with only 52 through the first 2 months, the math demands a staggering acceleration in the second half. We're talking about a pace that would need to average roughly 82 deliveries per month from March through December to hit the target. That's a rate Airbus has achieved before, but only with a fully functioning supply chain behind it. And right now, the supply chain has a gaping engine-shaped hole in it. The formal dispute process Faury has initiated introduces a wild card that could play out in multiple directions. If this escalates into full legal proceedings, and industry watchers at Reuters, Bloomberg, and CNBC are already drawing explicit parallels to the Airbus Qatar Airways courtroom battle, the collateral damage could go far beyond financial penalties. It could fundamentally reshape how airframers and engine manufacturers structure their contracts, their risk-sharing agreements, and their allocation frameworks for a generation. The aerospace industry operates on trust. When that trust breaks publicly, the reverberations last for decades. The A320neo production rate target has already been dialed back. Airbus now says it will reach between 70 and 75 aircraft per month by the end of 2027. Note, not in 2027, but by the end of it, stabilizing at rate 75 sometime after that. Rate 75 would represent the highest sustained monthly production rate ever achieved for a single commercial aircraft family in civil aerospace history. It would be a monumental industrial achievement, but that target keeps sliding to the right. It was supposed to be 75 per month in 2027. Now it's 70 to 75 by the end of 2027. And every month it slides, Boeing gets one more month to ramp its own production, stabilize its quality systems, and close the competitive gap. This story is far from over. The question isn't whether Airbus can build the planes. They can. The final assembly lines are ready. The workforce is in place. The structural supply chain, aside from engines, has improved significantly. The orders are stacked to the ceiling and beyond. The question is whether the engines will show up in the quantities, on the timeline, and with the reliability that Airbus needs to turn its massive backlog into delivered aircraft and flowing cash. And right now, that question does not have an answer that anyone in Toulouse, or on Wall Street, or in the boardrooms of airlines around the world finds acceptable. If you found this breakdown valuable, do me a favor. Hit that like button, subscribe to Aviation Atlas, and ring that notification bell so you're the first to know when the next chapter of this Airbus Pratt and Whitney saga breaks. Share this with a fellow aviation geeks who wants to understand what's really driving the headlines in commercial aviation. And for another deep dive into the stories shaping global aviation, check out this video right here. I think you're going to find it just as eye-opening. Until next time, clear skies.